disability is one of those things that is a little sometimes overlooked when we're doing planning for folks, but it does fall into one of our steps when it comes to our 7 steps.
Yep.
In 7 steps, one of them is protection, and that's loss of income. In case we pass away too soon, yes, our family is going to be taken care of, but for everyone that's on this call, I really think disability is a really, really important topic to talk to folks about because of some obvious reasons. One, if they were to get into an accident or get sick, maybe they have complications with a pregnancy, like my wife did, and we exercised her disability insurance. It was great. It's gonna affect their income. And if their income is affected, then they're not going to be able to contribute to their Roth IRAs, their emergency funds, their life insurance contracts, etc. And when people lose income, they can also lose their home. So we want to make sure that the folks that we're working with, the individuals, one, they understand their current disability insurance through their employer, and then maybe where there's some gaps. The other big opportunity here is business owners. When my wife married me, she wouldn't marry me until I had proper disability insurance in place. She worked in the medical field and she said, "Hey, how is this fair? If I get hurt or sick, we're covered. What about your income?" And I never really thought about it because I don't work a high risk job, but she's absolutely right. It would be nice to have some sort of income to at least cover the mortgage. Maybe it doesn't necessarily need to cover everything, but that's obviously a pretty large bill every month for most folks. And so, we're fortunate today. We have Rick on the call, very big veteran, right? And when it comes to disability insurance, heads up their disability department at Crump. And Crump has been fantastic. If it is at least in the disability department. We all know that we have challenges in other departments, but we'll tell you when it comes to the disability insurance, I've yet to have any issue. Very always willing to answer questions. So I would recommend, because this is maybe not something that you're going to talk about all the time or actually be putting in policies all the time, that it's okay to rely on them. And so what I've always done is I submit the request because, and Rick, I'd like you to cover this as far as like different careers or lines of work, depends on which company is going to want you because they do discriminate. And so I think that when I've relied on them, I've ordered the illustrations, print them out or whatever, comb through it, call Crump back and say, okay, explain this rider to me, explain this rider. What do you think is the most important riders here? And then just going through underwriting. But I will tell you, I've done a handful of these. I think maybe I have about 9 or 12 accounts, and I'm still getting paid. I mean, I put these in place years ago. And, when you think about life insurance, yes, does it have a nice big bump up front? Yes, it does. But it doesn't pay a very big renewal, right? It just barely covers your tolls. But with disability insurance, it's a great way to build up more passive income. And so, Rick, I think I would like to maybe just hit on that as well, hit on business owners today, but then also take a DI 101 approach. Because like I said, a lot of us, we have the health license to do this, and life license to do it. But again, this hasn't been a huge focus of ours, but we'd like it to be a little bit more. So maybe challenge, I know you said maybe mention do 5 to 10 a year and see what that's going to look like over the next 5 years. So with that being said, thanks again, Rick, for joining us today. And I'll just hand it over to you.
Of course. And hopefully the planes will be, well, they are up, but hopefully we'll all be making office visits here by the end of the year. And I'm in Chicago a couple times a year. So hopefully I can pop in and do kind of a face-to-face. That's always nice as well. Buy everybody lunch. Everybody likes free food. But everything that Pat said, 100% correct. This is going to be very DI 101. Pat, I know you muted yourself, but you know the audience better than I do. Just feel free to interject with questions, or anybody. Looks like we have 10 of us or so on the call. If anybody has a question, feel free to stop me. I'm gonna shoot for about 35 minutes of slides, and then we'll see if you all want to wait until the end, we can certainly do that as well. But this is going to be DI 101, and I am going to touch on some of the things that Pat talked about. This is not life insurance. This is not long-term care. Obviously not annuities. This is a little more it's for people with some specific occupations. That's what I would do. I'm gonna talk about some specific occupations throughout the presentation, and shoot for writing a few of these a year. I talked to Pat yesterday about some of the clientele you're working with. You're working with the right clientele. We're going to help you. And I was glad that Pat complimented my team yesterday, because nothing against the life and the long-term care departments. They work with a much wider volume of business, but I've done a good job tailoring this group to help you, and to help with the quoting, to help with the carriers, and then myself and the internal can be involved as much as you need us. I'm going to cover all that to make sure you understand how we can help, because DI is the bottom of the totem pole. We get it. But sometimes we have to go, we have to provide a little more service in order to get business in. So let's jump into this. And the first slide that I am going to talk about is what Pat was, of course, just talking about. Pat, just tell me if you can see that, and then I know everybody can see it, and I can
Yes.
move forward. Okay.
And Rick, if we want this slide deck, is that going to be available?
Oh yeah. I probably should have sent it before, but I'll certainly get that out to you by the end of the day, Pat.
No problem.
So exactly what Pat said. And once again, this is very DI 101. So I apologize for any, they made me put some graphics and stuff on here, but just stick with me with the wording. What is our number one asset? And everything that we're talking about today, look at this as yourself. I'm not saying you have to own a policy. Pat obviously owns one for obvious reasons, but your clients have the same fears and the same, they can deal with the same circumstances that you can. So if I was in front of all you, I would ask you this question. What's your number one asset? What's our client's number one asset? All of these are terribly important. Everything that all of us do on the insurance side when it comes to risk, insurance, we're protecting all these things: the home, the investments, savings, small businesses. We want we want to make sure that all of these things stay in place. God forbid something deals with a horrible event such as a disability or a death. Think about the difference between life insurance and DI, which you'll hear me refer to this as income replacement throughout this as well. DI, I'm not a huge fan of. People think of crutches and getting poked in the eye, and we are not talking about that. We are talking about things that could take people out of their work situation for a long period of time and can wipe things out, like the home, the investment, and think about a long-term disability. I mean, they're horrible. That at least when somebody dies, I don't want to make light of somebody dying, but at least there is some some finality, some end to that, some closure, and we can move on. A disability situation is not that. And we're 6 times more likely to die, or I'm sorry, to become disabled throughout our working years, which I'll use 30 to 55. I know we're all going to work before and after 30 to 55, but those years, or 30 to 60, 6 times more likely to deal with a long-term disability than we are to die. So that's just my little pitch. I'm not big on stats, but I am always not involved, because I don't work with claims departments, but we always have claims going on. And that's because there are unfortunately, a lot of long-term disability claims. Everything that we're talking about today, that I'm talking about, is based on an individual disability policy. I'm going to cover group DI, but everything we're talking about, individual based coverage. So real quick on this slide, this is kind of a eyebrow raiser. A lot of people don't realize this, because especially clients, and maybe you all as well, when we're talking about making sure somebody's protected, they're all thinking about everything on the right. They're all thinking about accidents. They're thinking about car wrecks. They're thinking about falling off the roof. They're thinking about falling down the stairs, cracking their head open, all of those horrible situations that are 100% covered. But 9 out of 10 of the claims that we deal with the products that I'm talking about are the reasons on the left-hand side of the teeter-totter. I'm just going to start at the bottom and work up, because these are the main reasons for long-term claims. The back situations, spine and neck, that's number one. Hands down, nothing's even close to it. That's the reason for long-term disability claims, bad backs. Right on top of that, number two, mental nervous conditions. Think about it. Depression, anxiety, sleep disorders, none of that disables somebody today, but long-term effect of stress, of not sleeping, that gets us into the block right on top of this: cancer, stroke, heart attack, aneurysms. Kind of flying through this a little bit, but what I want you to remember is exactly what's, what the 90-10. 9 out of 10 claims are based on illness and health problems. And, once again, think about that. Those are situations that, can take us out for a long period of time. And in a lot of situations, people are never coming back to work. So anyway, 9 out of 10 illness versus accidents. This is important. Pat talked about this earlier. When I am trying to get advisors to talk about disability, I implore them. My boss would get mad if he knew that I did this, but everybody's not a DI client. I could probably make a case that everybody needs it, but if I'm you're not going to pay your bills with writing disability insurance. I would want you to work to bring this up to the occupations where there's a probability, a good probability of getting an application going. And these are occupations where folks are more, DI is important to them. And this is where we get a ton of our business. I'm going to split it up in between white and blue gray collar clients, but really I'm going to focus on the white collar. And I'm really going to focus on the top 3 bullets here. If you are working or have access to any doctors, dentists, or attorneys, I would beg you to reach out to them or reach out to me first. I'll help you with the conversation. My team and I did, I don't even know, I think it was 11 million in DI last year. Half of it came from doctors, dentists, and attorneys. If you're working with those occupations, they will talk to you about this. They are educated on it in medical school, in dental school. Attorneys, when they join firms, they want them to get as much individual DI in place as they can to work along with that group DI. I'm going to cover that here in a little bit. But once again, doctors, dentists, and attorneys, think about it. They may start off in a firm, a clinic, or a hospital, but the goal for all 3 of them at some point is to go out on their own. And because of that, and the fact that doctors and dentists have a ton of claims, bad backs, nerve damage, fingers, rheumatoid arthritis, all that, they want to buy as much of this as they can. I would bring this up to them. They will have the conversation with you. You can do free review, offer them to review what they have in place. They will share what they have in place. All you're going to do is gather information and get it to me and my team. But I want you to hopefully become confident enough to bring it up to let us do a review for them. And you're going to hear me talk about doctors, dentists, and attorneys a couple of times. Again, tons of claims. They also start off with good incomes, and that income exponentially grows, usually with those occupations. And we all get paid every time they buy more benefit amount from you. So, once again, it's a great residual. Not only are there trails from it, but they buy more as their income increases. And DI, they're not going to shop it. They're not going to check every 3 years if they can get it from a different carrier. These policies are sticky. They stay in force. Obvious reasons for that. Limited carriers, lots of underwriting, things like that. Executives, I'm going to touch on them in a second because that's where we do a ton of DI business. They usually have DI through work, but the coverage that they have comes up short. And then the bottom 2, this is where we've done a lot of business definitely the last 3 or 4 years, but at least the last decade. IT and real estate. If you are dealing with any IT professionals, real estate agents, I'd bring it up. A lot of them are 1099. They have no benefits. IT professionals under 40, 45, in my experience, they believe in insurance. They are good people to bring this up to. No group benefit, no access to group benefits, good incomes, low risk occupations. These are great prospects. I'm just going to touch on the blue gray collar clients in a general way. I don't want to leave them out because they have more risk. In a lot of situations, home builders, construction, plumbing, landscaping, and a lot of them are making good incomes. Obviously, a prospect that you want to bring this up to. Once again, I'm giving you occupations where I find that the um, conversation is embraced and they'll reciprocate with you. But the where we get the business from, where it's just more on the white collar side, and I'll add CPAs, veterinarians, and pharmacists to that as well. So I wanted to touch specifically on these occupations. If you want to bring it up to everybody, I would love that. But I encourage people, look, you're not going to write a ton of DI. Most people don't. But if you're dealing with these occupations, you probably want to get more comfortable with it, because I can guarantee you, if you're not bringing it, at least bringing it up. You're not always going to, but at least bringing it up, because if you're not, Northwestern Mutual, Guardian, Principal, Mass Mutual, those advisors are calling doctors, dentists, and attorneys. They buy lists every month. And not only will they write the DI because they're good at it and they have good products, but they'll go after the life insurance as well. So all common sense, but I know you all know that stuff, but I wanted to remind you again. I'm not going to go too deep on product today, but a lot of people tell me, a lot of advisors tell me, it's just there's too many levers. It's just too confusing, and it's really not. So just in a real general sense, the meat and potatoes of a DI product, very simple. Three things, three components. There's a tax-free benefit amount. There's an elimination period. 99% of the time, we set up a 90-day or 180-day elimination period. I think you all know what an elimination is. It's just a period that takes place before the benefits kick in, after somebody is deemed to not be able to perform their specific occupation. And then there's a benefit period. You're not going to have to know any of that. We're going to do all that for you. If they're a particular age, particular occupation, then we're going to decide what's best. 180-day, maybe a 2-year. Maybe we're dealing with a 60-year-old. 2-year benefit period is better than none. There's no reason for them to have the Cadillac of benefit periods. But I just wanted you to know, we're going to do that for you. But the product is really tax-free benefit. There's going to be an elimination period, and then they're going to purchase a benefit period also. Typical objections. I'm just going to go into one or two of these. I don't want to run. We're okay on time. But these are typically what we hear. And I'll start with this. Along with the specific occupations, much different than life insurance, your ideal DI client, and we can write them younger and we can write them older and we can write any occupation. I mean, for the most part, we can. But really, think about that 30 to 50-year-old. Maybe 55. Let's stretch it out to 55. But really, that those folks that are in the middle of their income earning years, 30 to 50, maybe 55. Once again, I'm using this is ideal. White collar, 6 figures and up. That's kind of who we're chasing. That's where 90% of my business comes from. Working with those clientele. Again, we can write them younger, we can write them older. But there are reasons why I want people to understand this is not a life insurance client. This is a different clientele. Hopefully you're working with them, because these are the objections you're going to get. If they're under 40, they're going to say, I'm young and healthy and I don't need it. It won't happen to me. The whole Superman complex. I had it. I'm 50 now. Trust me, I'm not what I was when I was 40. But I tell them, if you're young and healthy, fantastic. Two things. If you're young, the premium's going to be inexpensive. If you're telling me you're healthy, that's great news, because guess what? We don't get more. Our health doesn't improve as time goes on. Trust me, I can tell you that. If you're healthy, we can get everything covered. No ratings, no exclusions. Let's get something in place now. I turn that one into an opportunity. I have coverage through my job. A lot of them are going to explain that to you. I'm going to cover that on the next slide. And then the other two, we hear these responses all the time. I know you folks have heard it, talking about life insurance, whatever. But these other two bubbles, I'll just sell my house or business. or I have money in my savings account. These are plans that they have. Obviously, we don't want them wiping out their savings account. That's a silly response, but that's what we hear. And think about somebody going through brain cancer, aneurysm, bone degeneration, blood disease, and now they're going to sell their house. Even if their husband or wife is going to help with that, we do. You all know what I'm going at. We do not want these plans to be their solution. God forbid they have to deal with this. So anyway, those are the objections you'll get. I can help you address any of them on an additional training. But anyway, those that's what you're going to hear. And I just wanted to prepare you a little bit for that. And when they say they have it through work, I turn this into an opportunity. Half the business that my team and I do is with clients that have Group DI in place. Why do we do that, or how do we do that? We like Group DI. Group DI is fantastic. I always tell clients that's great that your employer offers you coverage. A lot of them don't. We love it that you do. We just want you to understand a couple quick bullets, a couple quick things, because it's consistent with all Group DI plans. And the first bullet, you may not even want to get into the rest of these bullets because there is some depth there. But at the very least, when they say I have it through work, I'm all set, ask them one thing. Is it employer paid? 99% of the time it's employer paid. And you're not shoving a policy down there. So just tell them if it's employer paid, that's fantastic. Just so you know, whatever benefit it's built into the policy, it's going to be taxed. That's the piece they don't know. That's the piece a lot of advisors don't know. A lot of advisors, when the client says I have it through work, I'm good, they jump back into life insurance. They check that box, they're fine, no problem. And we're missing out here, because when the benefit is taxed and there's a cap, now I've moved into the second bullet. They have Group DI, but the Group DI is coming up extremely short. So I'll give you a quick example. If somebody's making $200,000, whatever, business owner, attorney, pharmacist, well, pharmacist maybe not, but doctor, they're making 200,000. They have Group DI. That's all they know. And all you've said is your employer paying for it? Yes. Or is the employer paying for it? Yes. Business is paying for it. Okay, no problem. Just want you to know that benefit's going to be taxed. Now you're just providing info. And then you're going to ask them, is there a cap? They may not know. And that's okay. You can check it online real quick. If you're doing some analysis for them, which we will do for you, ask them if there's a cap. They don't know there's a cap. They didn't know the benefit was going to be taxed. That $200,000 client, he thought he had $10,000 coming in if he gets disabled, because all he knows is he's got 60%. Because that's what people know about their Group DI, 60%. They don't understand that benefit's going to be taxed and there's going to be a cap. So we have a lot of folks out there making six figures and up. Stick with that $200,000 client. We've asked two questions. Is the benefit going to be, is the employer paying for it? Yes, it's going to be taxed. And then we find out there's a cap. Maybe the cap's 5,000. It's usually 5 or 10. They thought they had 10,000 coming in. That 5,000 is the cap and it's going to be taxed. They actually had 3,000 coming in, but they qualify for 10. So then we come in and inform them that they can purchase another 7,000 on top of that Group DI benefit, which is going to be taxed, and there's going to be a cap. I have an entire presentation on that. I know there's a lot there, but it's pretty simple math. What do you make? Go ahead.
Yeah, quick question on that. So just to clarify.
Yes.
I got a client who's is making $100,000 a year. They think they're signed up for 60,000.
Correct.
60%. So in their head, they're saying $60,000, $5,000 a month.
Exactly.
Right.
Yeah.
If they're making 200,000 and they're at 60%, it's going to be more than that. Or could they still be signed up for? They could be making 200,000, but there still could be just a cap of 5,000 on it.
Absolutely. And so just like you said, that person is making double the income, has the same benefit amount, and then talking about that 60,000 cap, that it's going to be taxed. So the 60,000 is what, 40? So now we have somebody who's making 200,000 and they realize I only have 40,000 coming in annually. if something happens to me.
Rick, is that public information based on well, I guess if they work for a private company, no, but is it pretty simple language to find out in their group benefit if there's a cap?
It's easy for me because I know exactly where to look. Usually it's on the first or second page. It'll say the elimination, it'll say the definition of disability, and then boom, it'll have, this policy will pay out a max of 5,000, 10,000, or 15. So yeah, it's pretty simple. It can usually be found pretty simply on a website. And if it's something you all are having trouble with, or if a client sends it to you, just send it to us, just send it to my team. They're going to forward it to me and I can figure that out for you. But I would say, Pat, the answer is yes. Very, very simple information to extract, but we can jump in and help also.
What about if the employer offered, they're paying for it, but then the employee has the ability to sign up for additional coverage?
Yeah, that's a great question, and you're going to run into that if doctors, dentists, and attorneys, some of these high earning executives, that's going to come up. And if they have that option, as long as it's good coverage, then they'll have a tax-free benefit. And then my advice to you is, as long as they're comfortable with it and it's decent, then I would suggest that they go in that direction, because it'll be, little to no underwriting. It'll be extremely inexpensive. And once again, we want to be here to help. We're not here to shove sales down your clients' throats. We'll tell you, we can replace it, although we don't replace a lot of DI, to be honest with you. What we usually do is layer on top, or if they're in good shape, we'll tell you they're in good shape.
Got it. And not to get too technical, but if the company is paying for a portion, they sign up for additional, will then their partial benefit be taxed and part of it won't?
It can depend. Okay. Are most of these clients going to be in Illinois?
Yeah, let's just assume that.
Illinois, New York, California. Usually if the benefit is purchased after taxes, then the whole benefit is going to be untaxed. But there are that's one that I would want to look at, because that can be language within the group DI, but it can work either way. Usually if there is a portion that a buy-up portion, then that's going to make everything tax-free, which is great for the client.
Okay.
Okay, and then real quick, just these other bullets. Does the group DI cover salary only? If you're dealing with people in sales, I'm going to give you my example real quick. So I work for Crump. They offer group DI. I appreciate it. I don't pay a dime for it. There was no underwriting, but it covers my salary only, and my salary is about 30% of my income. So I mean, I live off bonuses and commissions for the most part. So I get a group DI benefit that I appreciate, but it is only going to cover my salary, and it's going to be taxed. So I have, I figure if I'm going to talk about it, I better have one. So for the last 15 years, even before Crump, I bought my own policy. So I have a policy that follows me around, and it has a tax-free benefit that I would get in addition to my group DI. So people that are dealing with a lot of bonuses and commissions, and actually there's a lot of attorneys and a lot of doctors out there making money on bonuses and commissions, then we just want to ask them that additional question. And then of course, you've heard me talk about it, the group DI is hardly ever portable. One of the reasons why the attorneys, the doctors, and the dentist will chat with you. So I kind of touched on this earlier with the levers that go up and down, but this is what I want you to remember. I should have 2% right in the middle of that screen, but I don't. 2% is the amount of premium that we want to show a client in a proposal, regardless of age, regardless of income, regardless of their occupation, because we just don't see applications. I'm not saying we don't get any, but we do not see a high volume of applications once we go north of 2% of somebody's income. So if they're making 50 grand, $50,000 annually, we don't want to show quotes that are more than 1,000 in annual premium. If they're making 500,000, we don't want to show quotes that are more than 10,000 in premium. Not saying that, once again, not saying we can't go higher, can't go lower, but 2% rule is a big one with me. Why? DI premiums absolutely, and advisors have told me for years, DI is too expensive. I can't sell it. And I just tell them, well, you're showing the wrong, you're showing the wrong quote. And we don't want to show quotes that have no value. I'm not here to do that. You're not here to do that. But there are these levers that we can move up and down that still offer somebody a great policy. Not everybody wants the Cadillac. A lot of people buy Camrys. Look on the road, Sonatas. Why? Great car. They get you back and forth. They're good on gas mileage. We don't need a Cadillac. And these are the things that really affect the premiums. Once again, age. Not a big deal. We can deal with it, but premiums absolutely do start to take off around, 40, but more like 45-year-olds. Why? That's when claims start kicking in, mid 40s, late 40s and 50s, 60s. Gender. This is opposite from life insurance and long-term care. I shouldn't speak for long-term care because I don't know, but females are about 20% more expensive than males, only because claims. They just have more claims, and obviously the carriers have to build that into the premium. The occupation, the more risk, the more that's going to influence the premium, and then of course tobacco. So I'm just going to stick with age and gender. If we're dealing with a 55-year-old female attorney, we are going to quote her differently than somebody who is than a 35-year-old male. Different levers. Once again, somebody who's 55 is in a different point in their career. Maybe they only need a 10-year benefit period instead of to age 65. Maybe they can go 180-day elimination instead of 90. We're going to do that thinking for you. Again, I want to stress on that because my team and I understand people are not expert in DI. We got to help them, and so we're going to help. But once again, different eliminations, different riders, different benefit periods, and still feel like that we're providing a good value. That's how we want. Those are the quotes that we want to send you, and then we're going to be able to help you review them as well. But anyway, what affects premiums? Those are the items that affect. We're going to help move those levers up and down, still giving you a good product to show the client, so you're not going to have to do any guessing or any instructing. And 2%. Okay.